So this video is on how to calculate the accrued interest on a corporate bond trade. Now remember, when someone buys a bond, secondary market, that means they're trading between investors. So they buy a bond from someone else. Well, the bond buyer has to pay the bond seller the seller's prorated share of the next interest payment. Now remember, bonds pay interest every 6 months, semi-annually, and whoever owns the bond at the time is going to receive a full 6 month worth of interest. However, the bond buyer only held that bond for some period of time, and the bond seller owned it for some period of time. So the buyer has to pay the seller that person's portion or that person's share of the next interest payment. So a test question may ask you, well, how many days of accrued interest does the bond buyer have to pay to the bond seller? Or how much money, how much in dollars and cents does the bond buyer owe the bond seller? Let's take a look at this example. An investor buys 10 ABC Corporation 6% J&J bonds at 102 on Wednesday, April 13th in a regular way settlement. Now remember, regular way settlement for corporate bond trades is 2 business days after the trade date. The settlement date is the day that buyer takes possession. So if someone bought it on Wednesday, April 13th, we'll count 2 business days, Thursday and Friday the 15th. So the buyer takes possession, the buyer owns the bond as of Friday, April 15th. So the buyer has to pay the bond seller the accrued interest, the amount of interest accruing from the last interest payment date up until the day before the settlement date. Well, the day before would have been April 14th, and the last interest payment date would have been January 1st. So the J&J bond, J&J means January, July. So it pays interest every January 1st, every July 1st. The buyer owes the seller interest from January 1st up until April 14th, the day before the settlement date. So how many days of accrued interest does the buyer owe the seller? Now, the way we do the math with corporate securities is we assume that every month is 30 days long, and there are 360 days in a year. They call that the 30-360 method. That means there are 30 days in a year. 30 days in a month, and 360 days in a year. So how many days of accrued interest is that? So since every month we assume is 30 days long, so we're going to count from first January is 30 days, February is 30 days, March is 30 days, and then in April, we count from the beginning of April until the day before settlement, April 1st to April 14th. There are 14 days in April. So how many days total is that? 30, 60, 90, 104 days. Right. So that's 104 days worth of accrued interest that the buyer owes to the seller. Now, how much is that in dollars and cents? Well, how much does a 6% bond pay in interest per year? A 6% bond is 6% of the $1,000 face amount or par value of a bond. 6% of $1,000 is $60 per year. Now, the buyer owes the seller 104 days worth of interest. Now, how much is the daily interest payment? Well, at $60 per year, divided by 360 days in a year, well, that is, now this is where I'm going to get my calculator. $60 a year divided by 360 days in a year is 0.16666. 16 2/3 cents per day. So this bond pays interest or accrues interest at 16 2/3 cents a day. Now, at this point, I'm not going to clear my calculator. Now I'm going to multiply by the number of days, which we figured out is 104 days. So that's $17.33 1/3 cents per bond, and the investor bought 10 bonds. So we'll multiply that by 10, and that would be, well, now I have to round to the nearest penny, $173.33. So the buyer owes the seller 104 days worth of interest, and that works out to, with 10 bonds, $173.33. And that's how we do it.